A very good afternoon, good morning, welcome, Caroline, Konstantinos, Nadjam, Osho. Good to see you both, and good to see you all. There we go, and you can see me now. Brilliant. Right, interesting FOMC minutes today, and in the absence of US data, this could take some more significance, so we'll have a little cover of that. Hey, Brian, gold hit $4,000 an ounce. I know, I've been kicking myself having missed out on that silver long. It happened in 2020 and it happened again in 2025. I've got to learn. When I say missed out on it, just didn't get as much of it as I should have done. I know. Isn't it the way, Brian? Yeah. Oh. Hey, Carolyn. All right then, folks. Let's get stuck into the session. So we've got quite a few Fed speakers coming up today. We've got some on the calendar and some not on the calendar. So we've got Muslim at 2:30, got Barr at 2:30. I think they're both a text release. We've got Kashkari and Barr speaking again later. Lagarde out at 5. So quite a number of speakers coming up from the Fed. And the main event of the day is the FOMC meeting minutes coming up at 7. Now, if you just take a look here, remember the minutes are from this decision here. And remember what they did. The red line, the red numbers are the expectations, and then the top line is what was announced on September the 17th, and the June projection was for the meeting before. And notice that they projected interest rate cuts more aggressively than markets were expecting. That allowed the dollar to sell off immediately on the decision. But look at the inflation. The inflation metrics remain high and were higher a lot on the longer end of it, 2027, 2028, than markets were expecting. And the PCE coming in, look at 2.6 versus the 2.4 expected. Markets really focused on that, and the fact that GDP was higher than the markets were expecting. So higher growth, higher inflation. That was seen as the higher for longer outlook. And remember, because the dollar was sold quite heavily into the event, that allowed an immediate uptick in the dollar. And now we've been seeing sort of stuck in a kind of range bound action. So investors, the last sort of data we didn't have NFP on last Friday because of the US government shutdown. The last data point we've had is weak ADP jobs, private data. So investors are going to be really scouring this for any indication of where the Fed's at. It's going to be very tricky, and it'll be very interesting to see how the markets react. Stephen Mirren yesterday supports continued rate cuts, and Kashkari warned against cutting too fast. So make of that what you will. But that's just a quick reminder that the short-term interest rate markets are seeing 2 interest rate cuts this year. That's the expectation. And a slightly higher growth outlook for the US. And all of that means that there'll be less emphasis on the Fed to cut interest rates. So you see on the decision, what happened? The dollar soared higher. On the decision, September the 17th, where are we? You see the dollar initially fell lower and then moved higher. Now, this move higher in the dollar, eventually we should find sellers again. The latest shift higher in the dollar has been on the yen weakness and the New Zealand dollar weakness today as well. That's been supporting dollar strength, but we're not expecting that to be maintained. Okay, that's kind of expecting that to fade, and that does make something like euro dollar longs potentially attractive down here at this level. Okay, we'll see if this becomes like a hammer reversal level, and that's one to watch for later. Now, in terms of what else is going on, yesterday was important because what we saw was Wall Street finally take a breather, from days of ES moving higher, and just saw signs of our exhaustion, right? So the S&P 500 alongside the NASDAQ just pulled back from these highs. Now, that's attributed largely to Oracle falling on weaker than expected cloud margins, Tesla dropping more than 4% with its discount price announcement below $40,000, and we saw bonds rising on a pretty solid US Treasury auction. So that should keep the dollar strength capped, okay? And that should also keep dollar yen capped. So the sort of market chatter that's going on now is the AI bubble a real bubble? Are valuations stretched? Can this tech stock rally still keep moving? The bottom line is, as long as the Fed is easing, cutting rates, as long as earnings keep rising, then this keep moving higher. So this is seen as a dip, right, to be bought. It doesn't mean the dip won't carry on, but that's the broad outlook. On top of it, the debasement trade has been doing great. Gold continuing its march higher, just relentless. Silver moving up towards $50 an ounce, looks like it's going to hit that now. Copper moving up. Now that's one commodity I am still in, and copper longs are still in from all the way down here, the 4.4. So just holding that with talk of this, there's long-term supply issues for copper. So buying in copper on this big dip made a lot of sense. And the weak dollar should keep the copper prices and commodity prices generally supported. WTI, Brent crude, they face headwinds, got the EIA inventory data out later. Expected to be a build of 1.8 million barrels. That build last night was seen at 2.8 in the private data, so that's the expectations for today. Stocks that got my interest, a couple of them. I've entered a Deutsche Bank long to see if I can get a nice morning star pattern here, right? This is a morning star pattern that's potentially forming from the 50 exponential moving average. And if this closes high and above this candle here, I'm going to see if I can get a run up to 32 in Deutsche Bank stock. And this is one to look at, Caroline, because I know you like the DAX. You see, whenever you see this kind of price action pattern, do you see that hammer bar, inside bar? When you see sort of a hammer inside bar, that tends to be a really nice low risk, high reward entry. And you can just go for an entry like here on the trend line break like that. And what you could do, because that's such like an explosive area to go from, if you've got time, what you can do is you can enter here with like a 10-point stop on. So enter with a 10-point stop on the break of the trend. If it stops you out, okay, get out. Then re-enter again, 10-point stop. If you get taken out, okay, get taken out for 10 points, and then try it again. But either way, get in. Yeah, long DAX would make sense in that scenario. Now, that this moved because you've got this pin bar inside bar, and you are heading up into this overhead resistance. So definitely wouldn't take it now. But if you get like a strong close up here and then you get a retest down to there for tomorrow, that's worth looking at. Right? That's not bad. And the guard speaking later. The other trade that I like, so I'm in that Deutsche Bank long here, but I keep an eye on it, obviously. But if I get that as a close, I'll take that as a morning star pattern. And I've also seen an evening star pattern here that I quite like for a short. And this has got a sell rating outlook from analysts. And you can see that we're just sort of, do you see the way? Oh, yes, I love, great spot, Nadjam. And Nadjam's just pointing out this. Now, if I'd seen that earlier, I would have taken that. Move up, breaking out, and the target would be 25,000. Thank you, Nadjam. Very nice. Good work. I like this California Bancorp. You got a nice evening star pattern. On balance volume moving lower, and it's got an analyst sell rating. So I quite like that for a short. Stops just running above the 1749. So depending on what the spread is, I'll have a look at that at the open. So that keeps me up to date. Now, looking at the ES on the weekly, what have we got? Value area high, which we broke through yesterday. We were looking at this area as a potential support. It clearly failed, moved lower. Now, we've now got this sideways ranging action, and you can see here, we've got a kind of potential flag formation forming here. So keep an eye on that on the 1 hour time frame. As it stands, inventory is positive from the Globex Open, but only just so. On the 15-minute, we are opening just above yesterday's value area high, but market is in this sort of very tight balance. Let me just put that into that. I want to put that into that whole zone there. I'm going to mark all of that there. That's it. All right. We're in this balance area, so really quite sideways. So want to really avoid the chop today. So that's what I'm thinking in my mind. Just don't get chopped out in senseless trades. So can be cautious at the open. On the 5-minute, again, we're just moving sideways. So I really want to start to see this move, and ideally moving lower, right, would make sense, and trying to test yesterday's value area low or the point of control, or otherwise, right, looking for something clean, clear, definitely breaking out. Tricky, we've got the value area high above us and the developing value area low below us. So we're not in a great area. So that's what stands out to me, really. Worth just having a quick look at euro dollar. I'm looking at this post the Fed meeting. If you look at the yield spread, you can see that the yield spread's still pushing up. So this dip buying makes sense. So we can look for potential longs here because the yield spread's still high. That should support euro dollar upside. So keep that in mind. And the Aussie New Zealand dollar pair, RBNZ, delivered a 50 basis point cut yesterday, and they hinting that more cuts are to come. That sent the Aussie significantly higher against the New Zealand dollar. You can see that yield spread pushing up sharply, right? Now the Aussie and New Zealand dollars had quite a little run recently, but intraday, depending on where we get, if there's a way of getting into this, I don't mind this for a short-term scalp. I'm just going to run this on the 15. That's not unreasonable. Let's have a little look. 1, 2, that's 1. Let's have a little look at that. Just seeing if that's a potential entry there. You've got the on-balance volume pushing higher, breaking out of that trend line. I will take that as a little low conviction long. I'm going to put my orders in there. Okay, so just like this here, I'll just put my orders in and just see if I can get a little bit of a run up back up to these highs here, pivot point underneath, and just see if we can get anything out of that on the session. That is all. So now I'm just going to leave this for the open, and at the open, the only thing I consider would be a breakout of this 6765 region, which would be here, and then see if you can get a run down to the second standard deviation. But that's the only thing I'll be thinking of. And I'm going to keep it on the hourly chart so I just don't lose perspective of where we're at. Folks, we're back for the open. If anything else people are looking at, just watch out today. It's weird because I'm not sure how market's going to react to the minutes. And I could see the market's been cagey and waiting for the minutes at 7 and then moving. We're still in that US administration shutdown, uncharted territory. How do markets react with this ongoing uncertainty? We will see. So Muslim speaking at 2:20 anytime now. Just make sure the squawk's on. We're on. Got Bar at 2:30. Goolsby at 3.
The Saudi government is seeking $10 billion in a rare loan deal.
So with so many Fed speakers,
that suggests they are speaking
everything's
with large Wall Street lenders for the loan.
It's probably best just to wait until we get something clear.
No final decision has been made, and the Kingdom will decide not to proceed with the deal.
Yeah, so the only trade I probably missed for me today was this one here. Once those buyers trapped those sellers, that was the entry here. 6786.50. And it would have been only up to the 6789.50. Anyway. 2.5 points, so not a huge move. All right, folks, that's all from me today. Take care. Watch out for the FOMC minutes later, and watch out for this structure.